The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And I would like to take a little trip down memory lane this morning when we start the show. We're going to cover the stock market, of course, because we got a Bradley date due tomorrow. And then we also, we've had a failure in the bonds, no question about that. And it looks like we're setting up for a failure in gold also. So we need to cover all of those as we go through it. But the main thing I wanted to talk about today is there's a very prominent article across the Internet and also on Bloomberg about Greg Smith, who's resigning from Goldman Sachs. And he wrote this letter of resignation, bad-mouthing the firm. And he was saying about how badly the people wanted to make money, and we're not concerned about the customers. Well, Greg, I got some news for you, buddy. They build those big buildings on profits, not on being nice to customers. I know he must have been upset or passed over for something, would be my guess. But frankly, I would not. I don't know the real reason behind it. But he talks about some of the things that he's accomplished in life, and one of his greatest accomplishments was getting a bronze medal in the Jewish Olympics in table tennis. Well, Greg, you probably did a lot of work at Goldman Sachs to help a lot of people too, so don't be too hard on yourself. When I was at Drexel, I used to have to sit in once a month to the stockbrokers meetings. There were 24 of us in the office there in Beverly Hills, and the thing that was really funny about it was the fact that I would have to listen to them move stock, and that's basically what they did. Is they were taking stock from customers' accounts and selling it to other customers. That's basically how it operated back in the 70s. Now, since we're talking about being philanthropic, in the business, and the fact that these companies are there to make money, those of you that don't know how Drexel made all their money back in the days of the junk bond market is, Milken came out with the idea that the interest rates were 80%, or not 80%, they were about 18%. Firms could not get money, and they were not able to borrow. And so what he did, he changed the idea of being junk bonds to high yield bonds, and so people were able to come into the market, and Drexel made the whole market in the junk bond market. And when they started, usually you make a bond trade, you would make 1 or 2 points on a bond, sometimes 3 points. Well, they were doing junk bonds, and at the end, they were making 30 and 40 points on a bond. That was so huge you couldn't believe it. And the way they did it was, someone would call in, and since they were the whole market, they'd say, I've got to get rid of these, junk bonds that I have today. And one of their traders would say, this is a really rough time. Can you sell them in a couple of weeks? And knowing that he had to get rid of them, he says, well, I really need to get rid of them now. And he says, well, the market's a little soft. I can give you, 30 under bid. And the guy say, okay, I'll take them. And on the other side of the room, there's another guy looking to buy these bonds, and they're telling him how high the market is, and the market's really high bid and everything. So they're selling him 30 overbid. So they make a spread of 60 when they should be making 6. And that's how they made the money. They'd still be going on today if they hadn't gotten greedy and did insider trading. But anyway, remember, these companies are there to make money, and that's basically the bottom line that we have to look at. Now, I want to go to where we were on March the 5th, 2009, and we were at death's door. The Dow Jones was trading at 7,000. I posted the chart in the Tiger TV today, and if you'll take a look at it, if you get a chance, you'll see exactly where we were. It shows the Bradley model starting up on March the 3rd, I believe, of 2009. We didn't make the actual bottom until March the 9th of 2009. And, so all I'm going to do is try to show you what's happening then and what's happening now. And if you'll take a look at that pattern, we were at 7,000 in the Dow. The actual low on the Dow was a few days later. It was at, I believe, 6,600 in the Dow. And that was a 61% retracement off the low that we had made going back to, I believe, the 1987 low, as I recall. Yes, it was the 1987 low. So this is, why we had such an important bottom there. And we're looking at something very similar to that, I believe, on the upside. But we will get into that just a little bit later. Now, when you use the Bradley model, it's basically nothing more than cycles. It has nothing to do with earnings or fundamentals or anything. It's all related to these cycles that are related to these planetary pairs that occur. And they has a very good probability of working. I have 122 years of data of this, and it works better than 70% of the time. It's not hinged on being a PhD in mathematics or finance from MIT or Oxford or any place like that. It's just a basic pattern that of cycles, and that's all it is. And it has a positive or negative bias, and sometimes it does invert. And there's a possibility, like Basil said in the other show, there's a possibility that we could come in and this market could explode even higher to the upside. Now, there are a lot of signs that says that's not going to happen, but we'll have to wait and see. The market is being skewed, in my opinion, a great deal by Apple. People are talking about it. I mean, that's all you hear about it. I mean, it's the upgrades today. I heard 600, 750, and 812. These were the upgrades that I had heard when I listened to Bloomberg. And I was traveling all day yesterday, so I missed the big excitement. And I was actually surprised that the S&P wasn't up more than it was, and also the Dow not more than it was, because we did not make new highs in the transportation. It only made a 61% retracement of the last high, as did the transportation index and the utility index. Both did the same thing. And then we also had another spot where we were looking at the New York Stock Exchange index that we'll look at a little bit later, and it went up to the 786 level and has so far held that. But it's still kind of early, but the date is what we're looking at. Is we are coming into the Bradley date tomorrow, and we'll have a pretty good idea. I want to say a little bit about Apple here, because people are talking about it on the in the financial press a great deal. And I looked at your chart. I hardly ever do anything in stocks, but I had to take a look at it because I guess it's my nemesis, but I don't trade it very often, but I watch it go up. And anyway, it's in a parabolic move, folks. It's just like silver was. It's just like gold was. And, really, it's just parabolic. And unless Isaac Newton's law of motion, for a second law of motion, for every action there's an equal but opposite reaction. If that law is going to be repealed, then, Apple will probably go up forever. Well, maybe the top is not to 700, 800, or 1,000, or 1,500, whatever it could be. We don't know. But when it does correct, it will have a correction. This is what the market has told us through the years, that what goes up must come down. So we'll have an idea, if in fact these things actually work that way or not. But we'll have an idea probably within the next 3 or 4 days if this Bradley model is correct, and that's what we're looking at as far as what we want to see, what's going on. So what we need to do now is we really need to take a look at the Bradley model as we set today, and I'm going to put that one into the Tiger TV, so you'll take a look at it. And as we've shown here before, the market has been very bullish since October, when we pulled back into the 25th of the new moon on Thanksgiving. That was where it had a high bias for the January effect to be up, and it was making higher bottoms and everything. It had a very, very bullish bias, and now we are over the top here, either today, possibly as late as the 20th or 22nd. The 22nd is the new moon, but we'll wait and see if we're going to get there. But all I'm doing is, folks, if you were to take this chart and invert it, and you'd be seeing what happened in 2009, and we're at the 3-year anniversary of that. So we have an anniversary date coming in, plus these huge cycle stuff that is coming in along with the Bradley. We have the equinox getting ready to turn on the 20th, and so we have a super moon, I believe. I'm not sure it's a super moon. I have to wait and double check that one. I had something in my notes about it, but we'll be able to see, if that's the case, and we'll go from there. The U.S. dollar has. I wanted to cover a little bit about the U.S. dollar because it affects some of this stuff a great deal, because that's how money moves around. And the dollar is, starting to, get up to the 786 retracement of the last high. The main thing that's important, in my opinion, is the fact that we have a place in the euro where we are going to be in a breakouts mode because we had such strong support at that 130.80 in the euro, and that has broken down, and that's what's given our rise up here in the U.S. dollar. Whether it continues to go that way or not, I don't know. But the main thing I wanted to focus on this Bradley chart is the fact that it's completed a big AB equals CD here in the Dow Jones Industrial Average. And I've talked about the divergence between the NASDAQ and the S&P and the NASDAQ and the small caps and the NASDAQ and the Dow and the NASDAQ and the NYSE forever. And we have gone to levels far exceeding any extremes that we had in 2007 when we talked in October of that year. Far, far beyond those. So we have many extremes there. We are also making extremes in the interest rates. In other words, low interest rates, versus higher stock prices. That is also, at a record divergence. So this is at a time, where you want to be extremely careful. The VIX has made a yearly low below 2011 now. Hasn't even approached the other low, down into that level. But this is the time frame where when something happens to surprise everything, it's going to be a very, very big surprise in my opinion. I believe in the Bradley model a lot because I've tested it and got a lot of statistics behind it. I believe in the cycles. I believe in the patterns. This is where you pay your money and take your choice. We'll have to wait and see if it's going to be correct or not. But in the next few days, I'm going to issue a big sell signal here. I mean, a really major one, where I come out and just say, look, this is where you go after it, and this is where you put your stop. I was even thinking of changing the trade of the year from TPT to the stock to go short to stocks. And I'm in that time zone because I still have, first of all, it's my trade of the year. I could do it in November if I wanted to. But anyway, this is what I'm looking to do possibly is change the trade of the year to come in now because I believe I've missed the bond one. I think we missed the bonds by 3 points. The only thing that would make that bond trade work now would be the stock market to really crack, and you have a tremendous flight to quality back to Treasury bonds. And frankly, the way that bond chart looks, it's going to take a lot of movement to do that. It's broken down, as we said, last week when I was on the actually I was on the show Monday. I keep forgetting with all the traveling I do. On Monday, I said, if we break below that 140, 139 level, the bonds are, they're going to go lower, and we've already broken several points below that right now. So it looks like, it would take a miracle for bonds to get up to that 150 level now. But miracles have happened before in the stock market, so we'll see if another one is going to occur this time. But we won't know that for a few days yet. There's no question about it because the market's still in an area, where it's going to be going either direction at any particular time, and and mostly it's been going up, and part of it has been due to the Apple, and I believe that's the the big part of what we're looking at here is Apple being skewed, and it's skewing other things too. It pulls other stocks up with it, other tech stocks, because people come in and buy it. I mean, these mutual funds come in and buy these things because it's not their money. They don't have any skin in the game, and they're trying to do God's work too. Get their bonuses. By the way, Greg Smith got $120 million over his years at Goldman Sachs. I don't think he's giving any of it back. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
On the whole move, and that is that is nearly spot on when you look at this. It's just really amazing when you take a look at this chart on silver. That'll be in Tiger TV in just a few short seconds. You'll see that it missed the 61% retracement by just a heartbeat, and it looks to me like we're breaking down badly. We shouldn't have gone below the 3250 area, and we're already below 3220 right now. So that's telling us that it looks like we're getting ready to move to the downside. And but if you get a chance, take a look at this picture into Tiger TV, because it's really amazing how silver went right up to the 61% retracement of the August high, and now has broken down. We've taken out all the people that have bought it for the past month, and I think this is what's going to happen to stocks one of these days if it ever does top, and if this Bradley model does work. We'll have an idea if this is going to, to be the case. So we're looking at lower prices in both gold and silver. I believe we're going to be looking at 50, 80 in the gold very, very shortly. I believe that we're going to be looking at around the 29.50 level in the silver market. Without very, very far away, because we broke down 8 days. We had a little 4-day rally that went absolutely nowhere in silver. And then it's on its way, to the down move. Now, the thing that we have to remember here is that these are commodities, gold and silver, and in the commodity market in 2008, it also started to roll over. Now we haven't rolled over in crude oil, and we haven't rolled over in the grains by any stretch of the imagination because they've held up incredibly well. But the overall, the gold and silver are under some extreme pressure here. Now if this moves over to crude oil, then you're going to have something that's going to be even more sinister from a long-term basis because it's telling you that you're going to be able to see that there's going to be more deflation, than anything else. And, with the bond market, telling us that, interest rates are getting ready to go higher. So if you ever want to, get a mortgage, boy, now's the time to get it because anything under 4% in a 30-year mortgage or a 15-year mortgage would be a good thing, to look at. And you'd be able to understand, how that really works. Someone asked a question about the open interest, in the dollar index. And frankly, that would be silly to even, well, that's not true. Let me correct myself because there's nothing silly in this business, just the way you look at it. The reason why I think it's not important is the fact that the dollar index is not traded very widely. I mean, it's used as an indicator because people watch it closely, but it's so heavily weighted by the euro that that's the important thing. But if you go to look at the open interest and what's happening, with the euro contract on the futures exchange, you're looking about 0.3%. That's 0.3% of the total market. In other words, 99.7% of the market is traded in Forex banks and Forex trading. There's a very, very small percentage that is done on the futures exchange at the CME. That's not a bad thing because you can still trade it because it'll trade, anywhere from 10 to 20 contracts, without any trouble at all. But if you start trading 50, 100, 200, 500, you're going to have to be dealing, with someone that can handle that liquidity, and that's where the Forex banks come in. And believe me, they're not telling you where their positions are. I mean, they basically keep that pretty close to the vest of where they stand at any particular time. That's what we're really looking at. But the dollar index has held up, above that point relatively well, and I think we've got a shot at getting a little bit higher in it before we finally get a correction. The euro has broken down below the 130.80 level, which was very important. That sets up the next level of 129 and change. That's only 100 and 20 pips from where it's trading right now. So that's not very hard to do that. And I will pull up the euro chart to give you an idea of what we're looking at here because it had a beautiful bottom, that everybody was looking at down at the 786. And now what we're looking at is for the euro to come into the 618 retracement of this last low that we made in January at the 126 level. We went up to the 134 level, and now we're pulling back down. And it looks like we're going to get about 129, to that level without too much trouble. Well, I shouldn't say too much trouble. It's always troubling, but we'll keep an eye on it. But this trend is still to the downside. We've had much lower tops and lower bottoms over the last 7 or 8 months in the euro, so that tells us that we are heading down. And we want to, just remember that the downtrend is still intact. In the euro, I still believe we're going to hit, the 118 sometime in 2012. But I will have to wait for more data to actually see the thing actually occur. I did have one request that since I was talking about the New York Stock Exchange Index and where we were with some of the patterns that we were looking at, and the fact that we were right up against the 786. And this is what I'm going to do for Tiger TV now, is I'm going to put it in there and let you take a look at it. And as most of you that listen to the show, the New York Stock Exchange Index is the one index that they can't play games with. It's cap-weighted. It's got over 6,000 stocks in it, the largest stocks in the world. And so an Apple stock in this, and Apple is in this, it will not mean anything. I mean, it doesn't have anything to do with it. And we did go up to the 786 expansion of the high from April of last year. And so that is also, we're still in a downtrend, but frankly, since October, we've been in a very strong uptrend. And the bottom that we had on that new moon of the 25th of November was a really big one. And then, of course, we have another new moon coming in on the 22nd of this month. But frankly, with the Bradley model, coming into tomorrow, and then we have another cycle date on the 19th, which is over the weekend, and then we have the equinox on the 20th, and that's a very important one because that's an actual physical thing that occurs in our atmosphere with the Earth. And so that's going to be very important. And then we have the 22nd. We have the new moon. With all these things coming in and the bullishness that's there, the VIX index, they're talking about it being insignificant anymore, and it doesn't really measure fear and greed because things are different this time. Well, they could be, and maybe they are different this time. I'm not sure, but all I'm saying is that if you're long stocks up in here, you've got to. If you're long Apple, you're okay, but if you're long other things, that's not been the way to be. So that's all I can say here. I'm giving the same song and dance that I gave back in March of 2009 when I gave the big saying. In fact, my words in the letter was that we are at the mother of all bottoms, and that we're going to see a larger rally than anything we've had since 1938, and that in fact did happen. And, we'll see what happens this time, but we're going to have a really good idea here what's going on. Now, we've got a problem in the bond market here, and that is that we have a big gap down, and it's made a very, very severe correction. Once we've gone below that 140 level, if you go into Tiger TV, this is what I was talking about over the past several weeks, that once we broke below that, that was going to trigger a great deal of selling, and in fact it did. People asked me if I was going to go short at that point, and my answer to that was, as it always is I don't sell breakouts, I don't buy breakouts. I wait for patterns to complete, and so that I can get as low possible risk as I possibly can. I've certainly missed this move to the downside. I really had a really strong feeling that we were going to get up to that 148, 150 level. We only got as high as 146 and change, and we'll have a pretty good idea where bonds are going to go. But remember, this is a very, very long-term trade, folks. We're going back 30 years looking at interest rates dropping. And we've, in fact, we're having a pretty big correction, but it's no different than the one we had between October and November. And so whether that's going to be the same thing, that we just have a big correction and go up one more time, that's a possibility. This is still too early to tell. But the good part of this move, which I think was the cherry picking part, is if we could have been up to that 149 level, that would have been the ideal one, especially if it's trading at 137 now. But in fact, it didn't get there. So it's I was bearish, but I didn't get in the market. So it doesn't mean anything. It doesn't mean anything either way. But it still will give us a chance. It's not going to go down forever. We've been down 7 days in a row now, so we're oversold in the bonds. So the first place I would look at to sell them is if we get a good rally up into that 142, 143 level. But that's going to take some time before we get to that point. Now I wanted to talk a little bit about the TBT, because we were looking for that to get down to the level of around 1680, and we really never got to the point where I wanted to get there by any stretch of the imagination. We only got as low as 18, and so we missed it by about $1.40. But I really think that we've got a chance. If we get this correction out of the way, to get a good pullback, and we'll get a place to buy the TBT in here. I'm basing a lot of my weighting here on the Bradley model, because I have a lot of samples with this model, many weeks and months and years, and so statistically I know that it's very, very good. And as I mentioned before, it doesn't have a PhD in economics or a PhD in mathematics or anything like that. It's just on the basis of what Bradley saw as far as the weighting of the positive, negative aspects, of the market, and that's what you're looking at. Like if you have a Venus and Uranus aspect, that's a Fibonacci cycle of 255 divided by 365, that's 0.618 of the year, and all these are interrelated to these numbers of the Fibonacci sequence, and that's why these cycles are elliptical and they're not nominal or circular like they're posted in some cycle theory books. They do expand and contract by these numbers, and that's why it's more difficult. But all Bradley did was to give them weights, and the weights that he gave them were from Princeton University's Department of Astronomy. There was a Dr. Burrs at the time, B-U-R-S, and he was the one that gave the positive or negative weightings of these that Bradley used, and it's it's pretty good. It's just nothing more than a way of looking at cycles. It's nothing mysterious or anything like that, but we'll just have to be patient. If the TBT does back off a few days into this 1850 level, down about a couple points from where it is now, that might be a low-risk entry point. But right now, you just can't touch it here. It's a breakout. We broke out yesterday above 1975. It's moved up to 2065 or so. But this is where I get into trouble, is if I start buying breakouts. It just every time I've done it in the past, I've not had very great success. It might work for a few days, but the patterns are what really, you really want to look at. Look at the butterflies, the Gartleys, the ABCDs, because they're giving you at a point where you have the best risk control that you can possibly get at, any particular time of, what we're looking at it. Now, I mentioned when we started to talk about the stock market was the fact that when we were looking at the Dow Jones Utilities and the Dow Jones Transportations, both of those did not make new highs from the ones a month or so ago. They both went up to the 61% retracement yesterday and have so far backed off. We also have the VIX index is now, we've taken out the lows of the last 2 years, I believe, and the whole world is totally complacent. It's like, nothing ever happened, and all the banks are great again, and they can pass all the stress tests, that the Federal Reserve gives them, which I think is a good thing. And, we'll just have to understand, by looking at these charts in the next few days, because this is going to be the real critical part of what happens in the rest of the year, as far as I'm concerned, with the economy and the stock market. Because if the Bradley model, inverts from here, folks, I mean, it's going to go up a long, long ways. Basil mentioned that, and I really listened to Basil. Well, I listened to everybody, Steve and the whole group. But, when Basil says that, and he's been, he's kept you on the right side of this market for the last 3 weeks, well, more than that, but for the last 3 weeks, he's been saying, there's no indication of selling other than that one day we had, which when the market was down, but we had that string of 47 days where the market had never corrected, 1%. And that's only happened a few times in the history of the stock market. 1995 was the last time, and before that it was 1987. So that happens only once every 10 to 15 to 17 years. So these are definitely outlier events that we're up against here. But the transportation went up and stopped at the 618 retracement of the high that we made, in late January, and that's pretty much where we're going. Someone asked me a question. On Apple, they said, because I posted Apple intraday, several times, and the only thing that I can say about Apple is that I have a colleague in London who I respect. He was one of my students and has gone far, far beyond the things that I ever expected to do, because he's done some research that is absolutely amazing. And he had a target on Apple of $580 a share. And that's, I don't know what the high on Apple was today, but he had a high at $580 a share. The type of his work is rather secretive, and I will tell you this, that he has a tremendous ability to pick some of these spots like you've never seen before. And what I'm going to do is and in fact I did this when we were way back when we were doing the gold chart many years ago. I posted this chart, which was way back a long time ago. Now remember, this is the gold chart when we were topping back here, and it was he had a price objective of 1745. Excuse me, 1945. The high was 1937. He missed it by I think 3 days on the days that he was looking at me, showing me the charts. But his overall price objective was a price of $19.45. Now, the chart that I posted in Tiger TV just shows the Andrews pitchfork line showing the parallel swings between these moves, and none of the work that he does is based on something like this. He was just showing me the fact that there was a relationship from the moves from 08 through 09 through 2011. But the fact that he had the price right on the money, and he's looking for 580 in Apple today. And so I think Apple went above 580 because I guess the price objectives are going to 612 up to 812 or something like that, whatever. But anyway, my suggestion on Apple is just be careful here. Isaac Newton's never been wrong yet in the markets. What goes up does come down. It's a question of when. And, I frankly, don't know him more than anybody else. But we're leaving a lot of gaps on Apple. And go back and look at the Apple chart. Go back as far as you want to go. When it started trading, I think back in 82, you're not going to see any gaps on the Apple chart. And that's the main thing that you want to remember. The fact that gaps do get filled, and the exuberance is going to be amazing. As a matter of fact, at dinner Sunday, a gentleman was long Apple, and I reiterated the story about he was calculating how much money he had made, and I told him that Larry Williams said, when you go to the calculator, go to the phone first and get out of position because that's your greed factor coming in. Well, it's gone up another $30 from Sunday, so who knows where the top is going to be. Because only one or two people get that top price, folks. Keep in mind that that's why it's not important that you pick the exact top. The main thing is to do, the money management that you're supposed to have, and try not to lose, very much. That's the main thing that you wanted to look at. One thing that I did want to remind us of is that when we were doing the high in gold, when it topped way back in August, we were counting the number of weeks up, and we were within a period of 1 week of the exact high in the gold market, which was very near the high that my friend had picked in the market for gold at that time. Now, I don't know where Apple's going. Apple's not the market, folks. The market is everything else. In fact, all of the market is more Forex and bond related than it is stock related. The stock market gets our attention because of the 401ks and the investments and capitalization and the industries and everything like that, which is the big part of our market. But the volume part is really in the Forex market as far as the amount of money that moves. Okay, we've got to take a little break here, and when we get back, we want to wrap up because we've got a Bradley date tomorrow, and we'll see what happens.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And I wanted to end the show by talking a little bit about the Japanese yen because, you know, that thing, when it was down at 76, nobody wanted it. And, that was equivalent to about 73 in the dollar. And now we're, 10 points higher. It's been pretty much of a vertical rise. But why it's important to take a look at this if you get a chance in Tiger TV is the fact that, the yen had some really resistance at that 1.618 expansion at that 82.50 level. And it went through it, very, very easily. And, this was setting up for, a much larger move to the upside. It looks to me like, we're going to have one of the mother of all short covering rallies in the dollar versus the yen. Remember, this thing was at 360 going back about 30 years ago, so it could hack a heck of a move just to make a 38% retracement, off of the bottom, could take it up into the 105 level, without even scaring anybody. Now, the last thing that I would like to talk about on my show today, and of course tomorrow will be the show for commodities, and we're going to be covering, some of the things that we look at with natural gas and also those things. But the main thing that I wanted to talk about today is the banking index, because there was a lot of talking about that yesterday. I understand. I didn't know exactly what happened, something with the Fed and some kind of test or something. But we've made in fact, we've gone a little bit above the 61% retracement of the move from last February, which was a really major spot in the index itself. But when you look at the banking index on a longer term basis, you're going to see that this thing has got a long way to go, from being bullish. We're having a nice correction here, which I think is pretty good. We've had these before, but if you take a look at what the banking index has done since 2007, it's not even a third of the way back. And we're still making lower highs from 2010 and 2011. So even though the news is, really good, who knows? Maybe Greg will come out of retirement at Goldman Sachs and help the bank, do some more of God's work. I'm not sure. Anyway, the reason why I even brought that up about the fact about Goldman Sachs is that we don't only know part of the story of why the man resigned. You know, he might have been, you know, looked over for a promotion. Somebody got, you know, angry with him, you know, whatever. You know, there's so many things that could go wrong. So just because somebody says something and the firm came out and denied it all, which was a really big surprise. And we'll see, you know, anyway. Everybody knows this goes on. It's been in the business for any length of time at all. Why it's a surprise to anybody and why it even merits, you know, to be put in the news, you know, I'm not really sure. So we'll have to remember the main thing today. I want to remind you folks, we've got a Bradley date tomorrow. We have the New York Stock Exchange Index up against the 786. Apple's going through the roof, and we'll see what happens to that effect. Let me see. I had one other thing that I wanted to. Oh, the crude oil. The crude oil is, we've had some, a little bit of bouncing around in here. It's moved very little compared to gold and silver and the other things, which is good. It means it's trading on its own news and everything like that. But frankly, if we get a break below 102 in crude oil, we could be looking at, that's still $3.50 away, but it would be a possibility that would have a much better, chance of going below that 95 level, which is the premier support that we have in crude oil. But we'll have to, wait and see if that occurs. I wanted to mention one other thing about the bonds, and the fact is that the notes, which are the 20 years, have also had the big gap down and have done a huge damage to the chart picture, which tells us that higher interest rates are coming, and will, I don't know if that's going to be bullish to the stock market or not. I guess they could make it bullish in some way, I guess. Who knows? We'll wait and see. Anyway, that's it, folks. I'll see you on the Commodity Show tomorrow. May God bless, and have a great trading day.